at the worst moment, okay, at an institutional supply zone. And you know what? They could have been looking at the CoT data and they could have been thinking to themselves, look, long positions are larger than short positions, so that means I should go in long. How's it going, fellow traders? Magic Trader here, and this is the latest CFTC data that was released on June 7, 2022. Here's a brief snapshot of the positions held by the institutions as of that date. All right, so now let's take a look at what is going on with the positions and what the institutions are doing with them. Okay, so first we'll start off by taking a look at gold. What do you see with gold positions? Remember, we were talking about them taking profits on their long positions, and that's exactly what they were doing. Okay, highs of 330s, 338s, right? And we see them slowly declining, and now we're at 270. All right, that's pretty much it. Taking profit on long positions. Now, when you look at short positions, they haven't done much. Okay, 107, 98, 96, 95. They haven't done much. The whole focus has been on taking profits on long positions. Now, on the shorter time frame, I told everybody to watch for a move to the upside, which is what has taken place. And if you take a look at what retail traders are doing, they were lured into getting in short at the lows. Okay? And remember what happened at the highs. They were lured into going in long. So, you know, it gets to a point where they can't hold their long positions anymore, so they get out. And then they switch to short positions. And when they switch to short positions, what do the banks do? That's right. They reverse price up. Okay? I mean, it's terrible, but this is how the markets work. And we see it time and time again. So now as retail traders are getting suckered into going in short, they're pushing price to the upside. And so what do you think is going to happen next? What do you think will happen next? When retail traders can't hold on to their short positions anymore and they start getting out of their shorts and start entering in long, guess what the bankers are going to do? They're going to do this again. And so this whole cycle that took place here, they're going to replicate it and do it one more time. Okay? That's what all the evidence is suggesting. That's not what I think. That is what the charts are suggesting. Okay? So we'll continue to monitor this one to see how it goes. Oil, very strong lately. Very strong off that weekly area of demand, which we located several months ago. And we look at their positions. They went up from 421 to 423. So nothing significant. Long exposure is at 82%. So it's still sitting up there. It's above their average of 81%. So it's still sitting up there. And if we take a look at the charts, very strong. Institutional demand is in play. And that is it. Okay. So we're watching to see how this will play out until the end of June. All right, this is a very, very important month, as I have mentioned to members. So we're keeping an eye on how that is going to play out. The dollar, look at the dollar, 54, 55,000, an increase in long positions on the dollar, and shorts pretty much staying the same. Long exposure, 76%. And what do we see? Price comes within just a few pips within hitting the weekly area of demand, but we're seeing a very strong momentum build to the upside. Okay? All the dollar pairs are showing a lot of strength. So let's go over to the the Aussie. What do we see with the Aussie? We look at positions, and remember how we've been talking about how they've been adding in short positions, then taking profits, and then adding in short positions, and then taking profits. Well, they did it again. Added short positions and then started taking profits. And what did that do to price? It caused price to rally up. Okay, closing short positions causes price to rally up. Now, what are retail traders doing with their Aussie positions? They're adding long. Why would they do that? They're adding long at the highs. I don't know why they would even think about doing such a thing, because do you see long positions being added here? Okay, over the last few weeks, what do you see here? Are the banks adding long to their positions? No, they're not. What they're doing is they're closing shorts. Okay? So it's important to understand what the institutions are doing with their positions. Because if you understand what they're doing with their positions, then you should know what not to do with your positions. Most retail traders have no clue what the banks are doing with their positions, so they see a rally up in price, and what do they think about doing? Oh, let's add to our long positions. All right, so as they get in long, here at the highs, the banks just turn price over like that. Okay, unfortunate, but that's how it goes. USCAD, what do we see? Not much happening with long positions and shorts increasing. Why were shorts increasing? Well, let's see. You know, this candle here is where price was, is where the positions were reported. So they were adding short positions. Remember the contact of supply where we forecasted there'd be a move to the downside? Okay. So with this big push to the downside, remember I said, look, there's a big trend line here. We got to be careful. Plus the dollar is very strong. So be careful with that because we could see a reaction to the upside. Well, retail traders were adding to their short positions down here at the lows, which is the wrong thing to do. Okay? Because yes, the institutions were adding shorts, but only to lure retail traders into getting in short. Okay? Look at the size of their position, 39,000. It's not that big. Longs, 40. Okay? Long exposure, 51%. Short exposure, 49%. Overall, we're still in bullish territory when you look at the net positions. All right, so pressure to the upside, and we'll likely see it continue into this week. U.S. Swiss franc. Look at long positions, 23,000. They closed them to 18,000. Why do you think they did that? Because price was at the lows, okay? Long positions. And look at shorts. 1,000, 2,000, 2,600, okay? So they are increasing shorts down here, okay? So price has since rallied up. We don't know what's happening with this big push to the upside because that could be likely long positions being added. I would suspect that's probably long positions being added. And the same thing, okay? So we're seeing similar price action with the dollar, the US dollar, Japanese yen, US CAD, and here on the US Swiss. And if you take a look at what the retail traders are doing, the exact same thing as they're doing with the US CAD. They're adding shorts. Why? Because they were looking at this big move to the downside and they figured, oh, okay, it's going to continue going, so let's just get in short. Yes, there were supply in play. Yes, the move to the downside was to be expected because there wasn't any demand being contacted. But at the same time, we had the dollar contacting some demand. And the dollar will lead the other charts if it becomes in play. And it became in play. And so that's what ended up happening with price. Euro, US dollar. What do we see here? So this one, you can see that recently they were adding major shorts and then they took profit on those shorts, which helped fuel a move to the upside, right? And they were also adding in long positions to help fuel a move to the upside. But what happened when price contacted that weekly area of supply? They took profits on their long positions, okay? And we can see, look at that. That's our weekly area of supply that we had drawn in. And look what happened. Price rallied up into the weekly area of supply, got contacted, and now we're seeing a push to the downside. Amazing, right? But as price was rallying up, what did retail traders do? They went long right here at the highs, at the worst moment, okay? At an institutional supply zone. And you know what? They could have been looking at the CoT data and they could have been thinking to themselves, look, long positions are larger than short positions, so that means I should go in long. Well, if you don't understand the context of why they'd be adding in those long positions, then you'll find yourself in trouble. And the context was they were taking profits on short positions, which fueled a move to the upside. And so they just added some long to help push price to the upside right into supply. Okay? And so now you see what's happening. Retail traders are stuck with long positions and price is dropping. Pound. Look at shorts. Very aggressive. Longs not doing much. Shorts are aggressive, and we see that price was dropping from its peak. I told you pound will just follow along with the euro. Look at the net positions. Very, 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 very bearish. Very bearish. Okay? Very red, very bearish. 75% short exposure. So no reason to suspect that price is going to be going higher from what we see with the data. So that could be a good, strong indication of what to expect from the dollar and the euro and all those others. So we'll keep an eye on that. Okay? US dollar, Japanese yen. What do we see? We see that longs are the main driving factor here of why price is going up. They keep on adding to their positions. 86% of their overall exposure is geared to the long side. Net positions is a positive 91,000. And what do you have? A big, strong move to the upside. And as price continues to go higher, what do retail traders do? They short. So you can see that they kept on adding to their short positions as price continues higher. So not the thing to do. If you're going to trade it, the only thing you can do is go long. That's it. All right, Kiwi, what do we see? Cooled off long positions, starting to get aggressive with shorts because price was peaking here, just about to turn over. And so again, as price was dropping, what did the excuse me, retail traders do? They were shorting, okay? And now price starts rallying up, and what do? They're getting in long at the highs, thinking that this is going to continue. So what do the banks do? They turn it over and drop it. All right? And you can see the change in positions from the retail traders from last time we reported them to this time. All right, ladies and gents, so that is pretty much it. Make sure you like and subscribe so you can get future videos from us, get some insight, be prepared, make money in these markets, and not get suckered into the traps. Okay? That's it. Take care. See you next time. Bye.